The Reserve Bank of India has announced a 25 basis point cut in the repo rate, bringing borrowing rates to 6%, marking the second such reduction this year.
The MPC voted unanimously to reduce the policy repo rate by 25 basis points to 6% with immediate effect.
This decision comes amid rising global uncertainty, particularly with the implementation of US President Donald Trump's tariffs, which could put further pressure on India's economy. The RBI's shift to an accommodative stance indicates a continued focus on fostering economic growth, especially as the country faces challenges like moderating inflation and external shocks. Inflation has been recorded at a 7-month low of 3.61% in February 2025, below the RBI's target of 4%. However, the recent tariff hikes, including a 26% levy on Indian exports to the US, are expected to strain inflation further, potentially raising costs and dampening demand. This situation has forced the RBI to take proactive measures to support growth and stability. India's growth projections are under pressure as global economic conditions worsen. The impact of tariffs is expected to be significant, as these levies could hinder export growth and increase domestic inflationary pressures. With the economy showing signs of a slowdown, the RBI's rate cuts are aimed at stimulating domestic demand and providing relief to struggling sectors.
Real GDP is now projected for this fiscal 25-26 at 6.5%, with Q1 at 6.5%, Q2 at 6.7%, Q3 at 6.6%, and Q4 at 6.3%. While the risks are evenly balanced around these baseline projections, uncertainties remain high in the wake of recent spike in global volatility.
Now, as the global economic landscape continues to evolve, the RBI's actions signal its determination to support India's growth amid external challenges. However, the road ahead remains uncertain, and much will depend on how external factors like tariffs affect inflation and overall economic stability.